I do believe in the American dream. I believe there is such a thing as the American dream. And I believe those of us who have been given positions of responsibility must do everything we can to spotlight the dream and to make sure the dream shines in all neighborhoods. Owning a home is a part of that dream. It just is. Right here in America, if you own your own home, you're realizing the American dream.
We want to help make the dreams of first home buyers a reality. So we have decided to go further at this election and pledge to adopt a scheme similar to what's been running by our Kiwi cousins in New Zealand for many years now. Our new first home loan deposit scheme.
A reminder from the past and a history lesson, perhaps. Here's why I agree. I agree that with this man that cutting interest rate is just not going to cut it.
9 out of 10 economists calling a rate cut, but why some business leaders say the RBA should hold its fire. The Reserve Bank has been chalking up records. The main meeting of the board was the 33rd consecutive month with no change to rates, with official rates stuck on a historic low of 1.5%, betting on a 100% chance of a cut. It comes as the latest housing numbers show prices fell again in May, but the slide has slowed to its lowest rate in a year. Nationally, capital city prices were down 0.4%. Sydney was down 0.5% and Melbourne 0.33%. But Darwin and Perth are still in rapid decline, recording price drops of more than 1%. CoreLogic's Cameron Cusher agrees a 25 basis point cut is needed.
There's not too much to lose from cutting interest rates, and if it provides too much stimulus, it can be easily reversed. So I don't see any point in not cutting.
I'm not even going to comment on that. The actual credibility has just gone down the drain. I suppose these people are just employees of the organizations and companies that depend, and pretty much their existence depends on the continuation of the property market increasing. Even if the houses are looking to be, or the fall of the housing market is looking to be slowing down, they can't afford it. This is how dependent they are on it rising. So even if it just stayed, and I've said this before, even if it stayed exactly the same and not gone anywhere, just gone sideways, the Ponzi's don't work. The Ponzi's work only when more people are coming in, the more money is coming in, and the prices of whatever class, in this case housing, is going up. So it continues, or it depends on it continuing to go up, not down and not sideways either. So let's just cut rates just in case, or let's just cut it anyway and see how it goes. What goes? I mean, last month the falls of the housing has slowed. In Sydney, 0.4%, in Melbourne 0.3%, but that's still not good enough. Like I said, it needs to continue to go up, and for that matter, probably double figures every year.
But CoreLogic says APRA's relaxation of lending rules will do more to stimulate the housing market than a rate cut. One business leader says the economic textbook may say cut, but the textbook is wrong in extreme circumstances. And former ASX chief Elmer Funke Kupper says we live in extreme times. Elmer Funke Kupper, 9 out of 10 economists are calling a 25 basis point cut tomorrow. A lot of them got it wrong in May, though. So what are the chances the bank won't cut?
I'd say there's a fair chance that they will cut. And the reason I say that is that the RBA governor has essentially flagged that they're seriously considering it. And experience says that if they do that, they probably will cut.
Now, you've been saying a cut isn't necessary. Why?
Well, I think there's a couple of reasons for it. The first is that a rate cut won't fundamentally change the way the economy works. When rates are already this low, it is unlikely to stimulate business investment, where access to credit is now much more important than rates. And it's only going to give temporary relief to people who have a loan today, such as a home loan. Much more effective ways to stimulate the economy are things like tax cuts, increases in the minimum wage, and so forth.
Westpac thinks there'll be 3 cuts this year, JP Morgan predicting 4 in the next 12 months. These are pretty bold predictions, but you're saying it's not necessary. But there does seem to be a tide of opinion that we need at least 50 basis points cut to have any impact. Do you agree bigger cuts would be better?
No, I don't. Reducing rates makes sense according to the textbook. I think where the textbooks fall short is when you have an extreme environment. We have an extreme environment where interest rates are at historical lows and monetary easing has been at historical highs around the world. And in that environment, the effectiveness of rate cuts relative to other things you could do is simply not going to be particularly high.
A lot of people, though, would welcome surely an interest rate that would give them more cash in their wallets.
Well, of course they would. And I'm not denying that. The question is from an economic growth perspective, is it the best way to do it? For example, the rate cuts that are planned by the Morrison government are worth about 2 rate cuts. And of course, they're enduring because they start to improve the way businesses can plan long-term for their investments. It's a much more effective way to go about it than a rate cut per se. I'm not saying it won't help or do nothing. I'm saying it's unlikely to give the effect that people are looking for and that the economists think they will get, particularly in inflation, when there are other more effective measures. On top of that, there are some downsides that I think we shouldn't underestimate.
What are those downsides?
Well, I think the downsides is that stimulating people to borrow more at a time that they're already heavily indebted, I don't think is particularly smart, because one day interest rates will go back up and it will significantly increase the stress we put on households when it comes to paying their interest rate bills. I don't think that's smart. Another downside is older Australians who live off their savings, who will now face 0 or negative real rates of return. That pushes them to cut consumption or to go into higher risk investments, both of which are not particularly helpful.
We've just had the coalition returned. Within a day, there were cheers from the stock and property markets. But there have been constant warnings that we are facing low growth for years to come. You've obviously indicated what impact tax cuts would have. So is the responsibility here with government to kickstart our economy?
Ultimately, the only thing that's going to create growth is a more productive and more competitive economy. And there's a direct relationship between productivity, earnings growth, and wage growth. And so that's the engine that we need to get going. And the truth is, we've had probably a decade or so worth of, if I can use a blunt word, political nonsense, where states and federal governments have been working together, a lot of change in leadership. We hope we can put that behind us so we can work on both the short-term improvements, such as tax cuts, which are very, very helpful, particularly business tax cuts, as well as some of the longer-term reforms that make our economy more productive. Workplace reform, tax reform, fixing the energy and environment agenda, which is desperately needed. Those things will take 10 years to put in place. So in the short term, we can do some things around tax and things like the wage decision that we saw last week from the Fair Work Commission. But there's no excuse for getting on with a longer-term reform agenda that will ultimately translate into a more competitive and productive economy, much more valuable than pulling the interest rate lever in the short term.
Elmer,
And my favorite bit is within this segment.
There are some downsides that I think we shouldn't underestimate.
what are those downsides?
I think the downsides is that stimulating people to borrow more at a time that they're already heavily indebted, I don't think is particularly smart, because one day interest rates will go back up. And
One day the interest rates will go up. No one has ever actually mentioned that. What happens when the interest rates go up and you have to service these larger repayments day in, day out, every week, every month? But everybody seems to think that they're never going to go up. I mean, will they ever go up? When you say ever, what are we talking about? A year, 2 years, 3 years, 5, 10? You can't, seriously say with a straight face that the interest rates will never go up. So this man's got it right. I mean, it's common sense, some call it, but hey, we know it doesn't exist.